And here we go again, guys. New day, new lecture, brand new marks, revision lecture on a chapter called Set Off and Carry Forward of Losses. You always like a friend who helps you not in good times but also in bad times. And Set Off of Losses is that friend which helps you even when you make losses. How is that tackled? If you're at CA Inter, guys, this can get you a couple of really good marks. We will revise the entire chapter through a really nice shortcut, and then we will also look at an examination question to see how that goes ahead. Guys, the next few minutes are going to really sort out the chapter called Set Off of Losses and Carry Forward of Losses. Personally, for me, I used to find this chapter really confusing with what can you set it off with, what you can't set it off, and hence I've created a beautiful shortcut to help all of y'all revise this. Even if you're at CA Final, the same rules apply even then, so you can also watch this if you're at CA Inter or at CA Final. Guys, SMAT is an online academy which teaches tax, direct, indirect, as well as international tax. And we ensure that you learn it, you understand it, you revise it, and you re-revise it, especially through these videos, so that you're very ready for your CA exams. All the best. Here we go. So set off and carry forward of loss, what exactly is this, guys? The Income Tax Act taxes you when you make money. When you earn income, that means you have profits, whether in salaries or in IFHP or in your business or in your capital gain or in IFOS. Whenever you earn income, the Income Tax Act says, please pay us the tax. So whenever you have a loss in any of these heads, they also give you a benefit, and that benefit is called set off and carry forward of loss. Very important. Let's see how this is done. Guys, the first thing that you need to understand, the loss is like a blood requirement. So you will always have to think of blood loss as blood requirement. And guys, whenever you need blood, what is the first thing you do? The first step you do is you go to your own family. Of course, when you require blood, you go to your own family. That's the first step. That first step, if your blood is met there, great. If your blood requirement is not met, then you go to outsiders, you go to hospitals, and you go to outsiders. And then if the blood is met, great. If still not is met, then you go to the next step, that is again you come back to your family. So loss is blood requirement, and whenever you have a loss, you first go within your family, and then if the blood requirement is met, great, congratulations. Otherwise, you go outside your family, and then if it's still not met, you come back to your family. That is the step one, step two, and step three, which we will just see. Guys, the best thing to do, the best way to do any set of sum, and we'll do one from an exam also really soon, is to draw a diagram. Guys, this is you, and this is the diagram. This is salaries, this is IFHP, this is business, this is capital gain, and this is IFOS. Let's quickly write them down. So this is salaries, this is IFHP, income from house property, this is PGBP, that is your business and your profession, this is your capital gain, buying and selling assets, and this is your IFOS, that is income from other sources. And now let's see the first step, guys, within the family, when blood requirement is there within the family. Guys, salaries will not require the first step, because salaries will never have a blood requirement. Salaries will never have a loss, because guys, in any job, it's never that you can get a loss in your computation of salaries. In IFHP, you can have losses, and that will be set off within the family. So IFHP, guys, keep in your mind, it's a very friendly head. It's a very friendly head, but at the same time, it is a little shy. It is friendly, but it is also a little shy. You'll know what it means in some time. So IFHP, if you have a loss, yes. Can you set it off within the family? Yes, within the family, guys. The first step, that is within the family, also means intra-head. Intra, as you know, intra school, if you've seen, intra college is within the college, so intra head is within the head. So IFHP is a very shy but friendly family, but within themselves they can help each other. So if you have two houses, one is a loss, one is a profit, can you set it off? Yes, you can set it off. Next, in PGBP, guys, you have three distinct businesses. The first business is called a non-speculative business, but because that's very confusing to understand, we'll call it a normal business. NB is normal business. The next one is speculative business. SB is speculative business, and last one is specified business. Guys, specified business and speculative business are both unique blood. That means their blood is so unique that they will not go to anyone to get their blood. They will only go to their own blood. So their blood is very unique. Speculative blood is unique, and even specified business has unique blood. Guys, again, I'm repeating, unique blood means they will go only to their own blood group. They will not go to anyone who randomly for any blood. They will only and only wait for their own blood. Next, in capital gains, we have two types of capital gains: short-term capital loss, I'm writing because we're looking at blood requirement, and long-term capital loss. Guys, in this case, long-term capital gain loss has again a unique blood. That means it will only go to its own blood group, that is long-term capital gain. Next, in IFOS, guys, IFOS, there can be no loss. So loss is not allowed to be carried forward in IFOS. Example, IFOS basically means interest income, dividend income, where you don't have a loss. Even if you have it, you cannot carry it forward. And also casual income like betting on lotteries or going to Kaun Banega Crorepati or a Big Boss or basically Dream 11, etc. If you have any casual income, including betting on horses, guys, betting on horses, casual income, there you can have a loss, but you cannot carry it forward. You cannot set it off. The only loss that is there in IFOs which can be set off and carry forward is loss from owning and maintaining racehorses. Let's just differentiate between what is owning and maintaining racehorses and what is betting on horses. When you just simply go to a race and you bet on a horse, that's betting, that's casual income. But when you maintain horses, you train them and then you make them run and you win stake money, that is what is I'm talking about horses. And guys, horses also have unique blood. So there are 4 unique bloods. Speculative business has unique blood, specified business has unique blood, long-term capital gain loss has unique blood, and horses have unique blood. Unique basically means they cannot be set off against each other also. Unique means individually they're all unique and they will wait for their own blood to be set off. Next, now guys, let's finish step 1. Step 1 is within the family. Salaries will never have any step 1 requirement because they will not have blood requirement. They will never have a loss. IFHP can have a loss and they can go within their family and they can set it off, no problem. In PGBP, this is called a semi-friendly head. You'll know why I'm calling it semi-friendly, but right now just keep in mind it's a semi-friendly head. The first IFHP was a friendly but shy head. This is a semi-friendly head. Now within the family, normal business can go to anyone and take the blood. A speculative business and specified business cannot go even within the family because they have unique blood. So they will wait for their own kind of blood to be set it off. Capital gain, guys, is a non-friendly head. It is that kind of family which does not talk to any neighbors, etc. It's a non-friendly head. They don't talk to anyone. But within the family, can they set off short-term capital loss can be set off against long-term? No problem, because there's no unique blood. But long-term has unique blood. Basically, that means they cannot be set off against anyone, guys. Unique blood means even within your family, you cannot be set off against anyone. Forget outsiders. And last, IFOS, guys, here it's only horses whose income can be set off. But again, unique blood. So only if you have that kind of income, then you can set it off. So guys, this is step 1, that is within the family, also called intra-head. If your blood requirement is met here, great, congratulations. But if your blood requirement is not met here, then you will go to step 2. So first step 1, just 1 second. All right. So guys, the first thing that you will do, I'm just going to write this semi-friendly and non-friendly again there. This is semi-friendly. And this is non-friendly. You will know soon what this means, but just keep in mind, guys, there are 3 heads. IFHP is shy but friendly but shy. BGBP is semi-friendly, basically talks to a few people, doesn't talk to a few, and capital gain is completely non-friendly. Now let's go and look at step 2. Guys, step 1 is called intra-head, and step 1 has to be first met before you can go to step 2. You cannot straight jump to step 2. This also happened in the previous year. Next, step 2 is talking to outsiders. Basically, this is called inter-head. When you go to outsiders, it is called inter-head. This also has to be done in the same previous year. So both these have to be done in the same previous year. First, step 1, first look out within the family and then go to outsiders. Now guys, let's go back. Salaries will never want to go to step 1 also and not step 2 also, because they will never have any blood requirements. So thankfully, no losses here. IFHP step 1 can be done, but if case step 1 is not enough, guys, if within the family they cannot have blood, can they go outsiders? Yes, they can go to outsiders. They're a very friendly family. They can go to outsiders. Whom they can go to? They can go to salaries. Yes, guys, everyone they can go to. Salaries, yes. PGBP, yes. Capital gain, IFOS, everyone they can go to. They're a very friendly head. So hence friendly means they can go to anyone. You don't have to buy heart also. Just keep in mind, IFHP is a friendly head. So they can go to salaries and take blood. Yes, they can go to PGBP and take blood. They can go to capital gain and take blood, and they can go to IFOS and take blood also. Guys, they can take blood even from speculation business. They can take blood from specified business also. That means, guys, you have to only think of who wants the blood, not who is giving the blood. And that is how you will simplify this chapter. So again, I repeat, guys, whoever needs the blood, only you go to that person. So right now the blood requirement is with IFHP. Can IFHP go to any other? Are they friendly? Yes, they are very friendly. They can go to any head they can go, except, guys, casual income, no one can touch. If you earn some lottery winning, or let's say you went to KBC and you won 30 lakh rupees, against that nothing can be set off, because government wants on that casual income 30% tax. No set off, no reduction, nothing. So here again repeating, IFHP can go to any head, but they are shy. What do you mean by shy, guys? That there's a maximum capping. They can go and take blood only worth 2 lakhs. In a year they can go and take blood only worth 2 lakhs. So can they go to any head? Yes. But is there a capping? Yes, there is a capping of maximum 2 lakh worth of blood they can take from other heads. That is salaries done, IFHP done. Let's go to PGBP. Guys, PGBP, as you know, is a semi-friendly head. So first up, let me clarify that speculative business and specified business have unique blood. If they can't go within the family, why will they go outside? So these two can't go even outside. Now the remaining one is normal business, which is also called non-speculative business. Guys, write that in the exam, non-speculative business. But normal business, can it go outside? Yes, but it's a semi-friendly head. That means, can it go to salaries? No, it can't go to salaries. Can it go to IFHP? Yes, it can go to. Can it go to capital gain? Yes, it can go to. Can it go to IFOS? Yes, it can go to. So it's semi-friendly basically means it cannot go to salaries. And of course, casual income, no one can touch, not even PGBP. So PGBP also done. Next we go to capital gain, guys. Capital gain is simple because it's a non-friendly head. Non-friendly basically means they cannot go to any other head, so that's a non-friendly head. And of course, IFOS horses, they can also not go out because they're unique blood. So unique blood basically means they will only wait for their own kind of blood. Guys, that is step 2. Step 1 and step 2 are both happening in the same previous year. You first do step 1, then do step 2. If your blood requirement is met, great, thankfully you're healthy now. But if your blood requirement is still not met, then what do? You carry it forward to the next years. How many years you will see soon, but you carry it forward to the next years. And so this, guys, happens in the next years, not in the previous year, but the next years. And then you have to again come back to family. That means you will not go to outsiders, then you will be limited to your own family only. So family, then you go to outsiders, then you come back, and in the next years you only and only stay within the family. Let's go and see how is step 3 done and how many years can you carry it forward. Guys, salaries will not even require step 3 because they will never require blood, they will never have a loss. IFHP can be carried forward. Yes, they can be carried forward. But once you carry it forward, you'll be in the same head. You should know you cannot go to outsiders. You will only be in the family, and you can carry it forward for 8 years. 8 years basically means the year you incur it, not that year. After that 8 years, you can carry it forward. What about businesses, guys? Normal business can be carried forward. Yes, it can be carried forward for 8 years. Speculative business, the government doesn't want to encourage you to do this, so hence it's carried forward only for 4 years, because the government doesn't want you to do speculative businesses, because that leads to a lot of volatility in price, a lot of up and down in prices. Hence they say carried forward, but only for 4 years. And of course, specified business, the government wants you to carry it forward, and hence the government wants you to do this business, and hence they can be carried forward for unlimited years. Guys, understand the logic and don't by heart it. Normal business is 8 years because that's normal. Speculative business, they don't want you to carry it forward, and hence they don't want you to do this business, and hence 4 years only. And specified business, they want you to do this business, and hence a unlimited carry forward of this. What about these losses? Of course, they can be carried forward. Both can be carried forward for 8 years. So life is good. Carry forward for 8 years. 8 years is the most common one, unless the government doesn't want you to do. So then 4 years, or wants you to do, so then unlimited. And last, horses, guys. Horses can also be carried forward, but they can also be carried forward only for 4 years because the government doesn't want you to do a lot of this kind of business. So horses 4 years and speculative business 4 years. Specified business unlimited years, and everything else 8 years they can be carried forward. And you know, the year you incur it, not that year, after that 8 years. Guys, this is speculative. Sorry, this is set off and carry forward. Step 1 was within the family, step 2 was outside the family, and both step 1 and step 2 are in the same year. And step 3 is when you go to outsiders, sorry, and when you carry it forward and then you stay within the family. So step 3, basically the moment you come in step 3, you're only going to talk within your family. You're not going to talk to outsiders. You're only going to talk. So they have walls made in the step 3. Now, guys, this is set off and carry forward. A couple of important points here that you need to know before we actually go to the sum. First up, if you have a business which is discontinued, let's say you have a business and you have made some losses, so can you set off that loss and can you carry it forward to next years? Of course you can, guys. A loss making business, why will you continue it? If you're making loss in your business, will you continue your business? No, you will discontinue it. But don't worry, you can carry it forward next year. You can set it off from other businesses, but of course when you carry it forward, you will only have to be in the business head, but you can set it off against, carry forward and set it off against other businesses for 8 years. You can do that. Also, there is a sequence of carry forward and set off of loss. What is the sequence, guys? First thing is current year expenses, etc. So let's say I have a profit of 1,000 rupees this year. This is my income. This is my income of 1,000 rupees. I have a carry forward loss of let's say 80, and I have an unabsorbed depreciation of let's say 100. And this year's expenses first I will take this year's, guys. Current year always first. Let's say current year expenses were 900. So my profit remains 100. Now, so current year done, current year first. Second, Now, what do you take? Do you take unabsorbed depreciation or do you take carry forward loss? As you know, unabsorbed depreciation, guys, under section 32(2) has unlimited life. So if you have unlimited life, then why do you want to set that off first? It's like when you open your fridge, which dish will you take first or which food will you take first? The one which has a faster expiry. If you have two chocolates and one has an unlimited expiry, you will take the other chocolate which have a limited life. So you will take carry forward of loss first. So this 80 will go first, and the remaining 20 will be the depreciation. So that is the balance depreciation of 80 will be carried forward to the next years because they have unlimited life. So the sequence is current year expenses first, then you will take carry forward of loss, and after that, if anything remains, you will take unabsorbed depreciation. This is the sequence that you should keep in mind. Guys, next is to carry forward. That means in step 3, you need to file your return of income in time. If you file your return of income in time, congratulations, only then can you carry forward your loss. So let's say this year I have a loss, and if I don't file my return, then I will not be able to carry forward that year's loss. But what if the loss that is coming from previous years, guys, there that will not be impacted, because if you have not filed your return on time in this year, then this year's losses will be impacted, not the losses which are being carried forward. But don't worry, guys. Return of income has two exceptions. There are two exceptions to this. What are the two exceptions? One is unabsorbed depreciation. The government wants to encourage you to buy plant and machinery, furniture, building, intangible assets, and have depreciation. And hence they say for unabsorbed depreciation, as well as for income from house property, the government wants you to encourage you to buy house property. And hence for these two, even if you don't file a return of income or you file it late, no problem. So return of income is a requirement, but not for unabsorbed depreciation, section 32, and not for IFHP. Next, guys, please remember it's family, then outsiders, and then step 3 is again family. And always remember, guys, this diagram is something that will really help you in the exam. Now over to the sections. Guys, step 1, it's a very series of sections. Step 1 is section 70. Step 2 is section 71, and step 3 has different sections. Like salary, we don't have a section. IFHP is section 71B. Remember a house which and house number is 71B. PGBP also goes in a section sequence. This is 72, this is 73, and this is 73A. So again, guys, 70 is step 1, 71 is step 2. Step 3 has different sections. House property has number 71B. Business is normal business 72. Speculative business and specified business are unique blood, so 73 and 73A. This is 74. This is 70. This is 70. One second. This is 73, 73A. This is 74, and this is 74A. This is how you will carry forward and set off the losses with the sections. I hope this is understood. Now let's do an examination question and let's see how that goes. Always the best thing to do is to revise a concept and then do a couple of sums. I'm taking an exam question, so this is how exactly they want to ask you in the exam. Guys, I can't draw the diagram, but I will draw it on another page. Income from salary is 2,20,000. Guys, Miss Pooja, resident individual, provides the following information of her income losses for the year ended 31st March 2020. I'm just going to quickly draw this on a diagram here. So once we have the diagram in front of us, solving will be very, very easy. Let's quickly, for Pooja, let's do this. Guys, this is Pooja here. Once you draw a diagram, solving it becomes very, very simple. This is salary, this is IFHP, this is PGBP, this is capital gain, and this is IFOS. Make it always in the exam, and hence solving will become very, very simple. Income from salary is 2,20,000. So I'm just going to put income from salary. I'll have to do a lot of back and forth because that's a PDF and I cannot write on that. So 2,20,000 is a profit. Next, guys, let's go to the next one. The next one is income from house property, which is let out. Net annual value is 1,50,000. They've already given you 1,50,000, but that's the net annual value. So I'm going to make 70% of that, because 1,50,000, I will minus 30%. I'm not showing the calculation here, but you'll have to show it in the exam. So 1,50,000 into 30%, if you reduce, that's 1,05,000. But here, guys, it's still, you've not minus interest deduction if there is in the exam. Let's see. Share of loss from firm in which she's a partner, guys, partnership firm. Share of profit is not taxed, and the loss also, guys, no problem there, that you don't take any acknowledgement of that, because even profit is not taxed and loss is also not set off. Loss from specified business, 20,000. Unique blood, guys. Specified business. So I'm just going to write specified business here. It's unique blood, so I'm going to mark a star here, and 20,000. Unless, guys, there is something to set it off. Otherwise, this will be carried forward. So this will go in a note. So this crooked line means it will go in a note. Next. Income from textile business before adjusting the following items. So 3 lakh is your income, but you've not minus current year depreciation. Of course, current year comes first. So I'm going to do normal business. So 3 lakh is my normal business. Of course, current year depreciation 60,000 I will minus because current year first. Let's move ahead, guys. Let's move ahead and see what else is given. So after current year depreciation, they have unabsorbed depreciation of earlier years, but in the sequence, this will wait. First, brought forward loss of textile business of AY 19, 18, 19. Guys, AY 18, 19 means it's still fresh. It has 8 years, so it's still fresh. Always check the expiry, 90,000 and then 2,25,000 if you have profits. First is carried forward loss of 90,000 that I will minus. These two things when I minus, I have remaining 1,50,000. And my unabsorbed depreciation unfortunately is 2,25,000. I cannot minus the entire thing because as you know, unabsorbed depreciation can never lead to a loss. So I will minus 1,50,000 and the 75,000 worth of unabsorbed depreciation, I will let them continue. A little bit of here and there has happened on the numbers. I'll just write it 2,20,000 here. Anyways, guys, so unabsorbed depreciation is worth 2,25,000. Out of that 1,50,000 we've already absorbed. So 75,000 is waiting to be absorbed. And as you know, guys, unabsorbed depreciation can go to any head and take it, any head, and you can try to set it off. Next, let's see what else is there in the exam question. Long-term capital gain on sale of debentures, 75,000. It's a gain. So I'm just going to go here and long-term capital gain. So that's long-term capital gain of 75,000. It's unique blood, but it's not a loss, so I'm not writing unique blood right now. Then you have a long-term capital loss of 1 lakh. STT not paid, doesn't matter, all that, guys. Doesn't matter. All you need to do is long-term capital loss, unique blood of 1 lakh because that's a loss, so it comes in brackets. Next is long-term capital gain on sale of equity shares listed, etc. Doesn't matter. Long-term capital gain of 1,50,000. So that is long-term capital gain. Life is very simple. Don't worry about this. As long as you follow that pattern of blood requirement, which we will start soon, you will get all the right answers. And next, dividend from units of UTI 5,000. Guys, this dividend earlier used to be exempt when this examination question came, but now in your year it's taxable. So this 5,000 is here and it might be taxable. Guys, now we are ready for blood requirement. Let's go to the first step. First step is we have some 2 notes. Let's read those notes, guys. During the previous year, Miss Pooja has repaid 5,25,000 towards housing loan. She has a house loan, guys, and she has IFHP also from a scheduled bank. Out of this, 3,16,000 was towards payment of interest. You know, 24B section is payment of interest. 3,16,000 is towards interest, and this is let out. So in let out, there is no limit. If you've seen my video on IFHP, you'll know there is no limit to interest deduction. So the entire 3,16,000 can be minus. So let's minus 3,16,000, the entire interest under section 24B. So 3,16,000 I'm going to minus. And when I minus that, I will get a loss of 2,11,000. Let me just check this. 3,16,000 minus 1,05,000 is 2,11,000 of loss. Perfect, guys. Now we have blood requirement. Step 1, step 2, step 3. First, step 1, within the family. IFHP, can we do it within the family? No, we can't do it within the family because there is only a loss of 2,11,000. There's no profit. PGBP, can we do within the family? Let's see. Is there a loss? No, everything is met. It's zero, so there's no loss. Specified business, there is loss, but of course you'll have to wait. So there's an arrow here, or there is a line here, crooked line, which means it will go in a note. And unabsorbed depreciation is 75,000. Can I set it off? Yes, I can set it off, unabsorbed depreciation, but we'll wait for that. But because first it's only within the family. Capital gain within the family, long-term capital loss is unique blood, but we have 2 gains which can be set off against. So first 75,000 plus 1,50,000. I have gains of 2,25,000, guys. These two are gains. I have gains worth 2,25,000. I have loss of 1 lakh. So basically that means I have profit gain of 1,25,000. So great, I could adjust, I could meet the blood requirement. So now this is long-term capital gain. And of course, IFOs does not have any blood requirements. Step 1 done, section 70 done. This was section 70. Next, 71, where you go to other family members. Can IFHP go to other family members? Yes, it is a friendly head, but a little shy. So out of 2,11,000, only 2 lakh it will take. So 11,000, what will it be done? 11,000 will be carried forward. This, guys, is going to other families. So from here, I take 2 lakhs for IFHP. So here 20,000 remains. Let's see what can be done with that head. Now let's go to PGBP. Does it want to go to other heads? Yes, 75,000 can go to other heads. So 75,000 will go here. I will take 75,000 from here. So what remains is 50,000 here. And of course, there is no loss requirement, blood requirement here. IFOS also has no blood requirement. Now let's see if there's any carried forward. Salary, this will be taxed. IFHP, there is a crooked line, that means this will be carried forward. Specified business, this will be carried forward. Unabsorbed depreciation has been met completely, so this is over. This thing is over. There's nothing else remaining here. Capital gain 50,000 will be taxed, and IFOS 5,000 will be taxed. So in the examination, answer should be 20,000, should be 50,000, and should be 5,000. These are the profits which should be taxable. Let's see. So our numbers are 20,000, 50,000, and 5,000. Let's check that. In the exam, of course, 5,000 they will not have because that time it was exempt. Let's see the examination answer. Guys, the examination answer, as you can see, is 20,000. There you can see that. Then 50,000, there you can see. And dividend income that time was exempt, but it will be taxable now. So these three numbers, your sum is absolutely right. And there will be two notes, one on specified business 20,000 being carried forward, and one on house property being carried forward. House property is carried forward under section 71B, if you remember, and it's carried forward for 8 years. And specified business can be carried forward. This is under section 73A, and it can be carried forward for unlimited number of years. This is your 6 marks, guys. Set off is a very interesting chapter. Blood requirement is going to be the shortcut, which really helps you revise also and re-revise this. Always remember, guys, the sequence is very, very important. Discontinued business also loss can be set off. Unabsorbed depreciation can go anywhere and has unlimited life. Return of income formality is there, but only for the current year losses. If you're being carried forward some losses, those losses do not depend whether you file a return on time or not. That is set off of losses. Score your marks really well. Do really well in your exams, guys. Over to the next revision lecture really, really soon. All the best. Thank you.